As you might know, your money in your bank account or in your EcoCash wallet is nothing but just a number stored in a database. When you receive $20 now, your EcoCash bank balance is just added by 20 minus any charges that EcoCash might want to charge you. When you cash out $10 from your EcoCash agent, what just happens is EcoCash just subtracts $10 from the number in the balance column within a very, very large database. There might be cash exchange between you and the bank teller or between you and the agent, but the bottom line is all your money is just a number stored in your bank's centralized database. And that is where the problem is. We have become so reliant on centralized systems that act as choke points, systems that are in fact single points of failure. If EcoCash's big database goes offline today, you will not be able to do any cash out. If a rogue employee from Econet decides to inflate their wallet by adding a few zeros to their balance today, and if there is no one at Econet able to notice this, then that person will essentially get away with it. How does your bank work? How does it store your money? In theory, EcoCash is supposed to have cash in hand equal to the total of everyone's balance. In other words, your $1, which is your EcoCash balance, should be backed by a $1 in EcoCash cents. You can give Econet the $1 in your balance, and they should give you back your physical $1 in return. Now, if you've been following global trends on finance, you probably have heard about stablecoins. You have probably heard that one USDT coin on the blockchain is backed by $1 in Tether's hands, which is essentially equivalent to what Econet is doing, with $1 in your balance theoretically being backed by $1 in Econet's hands. The only difference here is that the one USDT coin is stored as a number on a blockchain network, whereas your $1 in EcoCash is stored as a number in Econet's centralized system. A system that can be easily hacked, even with the best of security measures. A system that can be shut down at any time. A system that they can discriminate you on. A system that you have to provide your full identity, your identity data just to get access. A database system that you get to be charged lots and lots of fees, just to have a few numbers stored in your name. Today, I want to convince you that what Econet is doing with EcoCash, what any bank in the world is doing, and this will be replaced by stablecoins, what stablecoins are doing. I'm going to convince you that the next bank is going to run its database not on a centralized system, but on a decentralized database called the blockchain. My name is Mnyaraz Togarepi. Welcome to the Tomorrow Money Show. Before I get into stablecoins, I want to start by showing you something most people never think about, that I already mentioned in the introduction, which is the fact that the majority of money isn't physical anymore. It's digital. And digital money lives in databases as just numbers. Whether your money is in CBZ, EcoCash, CABS, Inbox, NMB, or Omari, all of them are basically running on one giant computer system behind the scenes. And in that system, your entire financial life is just rows in a database table. Your balance is a number in a column. A transaction is just a change in that database, either an addition to your balance or a subtraction to that balance. When your transaction fails, there is just a database row blocking an update to your row. Once you understand that, suddenly the whole financial system starts to make sense. I know when you think of a bank, you probably think of buildings, vaults, bank tellers, managers, and long queues. Yes, those are things part of the bank, but they are not the real bank. The real bank, the true bank, is actually an IT system sitting on top of servers. Your bank is just a system. Inside this system is a centralized database that stores all customer information, account numbers, balances, deposits, withdrawals, loan interests, transaction history. Everything is stored there. So happens when you deposit $100 at CBZ. There is no special vote where with your name written on it. The bank teller doesn't walk to a safety deposit box labeled blessings savings. No. A bank employee just enters the deposit into their software, and the system simply adds 100 to the balance field linked to your account number. That's it. Your money, it becomes data. It just becomes a number. And this database acts as the single source of truth for the entire bank. If that database says your balance is zero, then your balance is zero. If it says you never made a payment, then you never did. This is why banks are so powerful, because whoever controls the database, that person controls the money. And you might be wondering, how do transfers work? And let me just talk about how you get to transfer money from your account to your friend's account. When you transfer X amount of money to someone at the same bank, say CBZ, the system just subtracts X from your rows and adds X to the other person's row, or inside the same database. No physical money moves between branches, and I'm sure you know just that. It's just a change of numbers. And when you transfer your money from CBZ to KEBS, it gets even more interesting. And I have to mention KEBS. As you can see, I am wearing an Old Mutual branded jacket which owns KEBS. I've had the privilege of being part of the Value Creation Challenge, which is Old Mutual's initiatives to support startups. Anyways, I will not let that stop me to talk about banks. So when you transfer money from CBZ to KEBS, these banks don't update each other's database directly per se. They just send messages, digital instructions through systems like Zipit or the RTGS systems, or Swift if it's an international transfer. At CBZ, a staff member or an automated process sends the message, "Hey KEBS, reduce your customer's balance by 100 and increase our balance by 100. Then the banks get to settle the differences later. And this process of sending the instructions can take long. That's why you see interbank transfers can take hours and maybe sometimes days. And if you think about it, everything is just messages communicating how each bank should update their database. They have to just update their database. The money itself, it never moves. And because everything sits inside one centralized system, the bank, they can freeze your account. It can reverse a transaction, block a transaction. They can change policies overnight or simply go offline, which happens a lot right here in Zimbabwe. You know that that classic, we are updating our system statement, which every bank throw whenever their systems go down. But I also have to talk about how mobile money wallets work, since they are technically not the same as banks. And I'm going to use EcoCash as an example, which is used by many Zimbabweans. So EcoCash feels like money magically travels from one phone to another phone. But the reality is even simpler. EcoCash is also just a centralized database. When you cash in at any EcoCash agent, you hand in over your physical money. The agent enters that transaction into the EcoCash system. EcoCash increases your balance inside their database. The physical money is deposited into an EcoCash bank account elsewhere, sometime later in the future. You're not receiving real money. You're just receiving database credits, digital points that are controlled by EcoCash. And now, when you send money to your sister using EcoCash system, what EcoCash does is it just subtracts a number from your account and it increases your sister's number by that same number. Then it logs that as a transaction into the database, and perhaps they will charge you some fees for that. The money never travels anywhere. It's not in your SIM card. It's not in your phone. It's just sitting on EcoCash servers, and your phone is simply like a remote that controls, that has remote access to that system. EcoCash, just like a bank, has user tables. balance tables, transaction logs, account restrictions, and daily limits that are just controlled by computer code. Every error you experience, like transaction failed, please try again later, or insufficient funds, or daily limit reached, is just a rule written inside EcoCash database. And like banks, EcoCash is fully centralized. They can freeze your account, they can reverse payments, they can block transactions, they can limit your balance, or they can easily turn off their system and you won't be able to access it because they own the database. And in traditional finance, the one who owns the database owns the money. Okay, Cash owns the money. They choose not to give it back. They can choose not to give it back if they want to. Uh, and EcoCash is faster on the surface, but behind the scenes, it's still the same model. Centralized control, limited transparency, permission based, built on trust on the company, which is Econet, which runs EcoCash. You have to trust that there isn't going to be a rogue employee who uses their privilege to drain your account. Or always, you have to trust that EcoCash won't inflate their own balance and cause a run on the bank in the event that everyone wants to cash out at the same time. It is a single point of failure, a choke point. And I want you to understand the real picture. Banks and EcoCash all run on the same idea. And in reality, human is truly not yours. It's just an entry in their database system. And they hold the database, they hold the money. They alone know what's in the database. And it's a closed system. And this is exactly why people around the world, especially here in Africa, should be turning to stablecoins, where the ledger is public, it's decentralized, it's programmable, and cannot be altered by a single company employee without any accountability. But before I go there, it's important to remember, with banks, the database belongs to them. With mobile money, the database belongs to them. With stable coins, the database belongs to everyone, and that changes everything. So, what are stable coins? Now we have to talk about stable coins. Stable coins are like your bank balance. They are like your EcoCash money. The only difference is with EcoCash, the money is just a number stored in a centralized system, which is controlled by Econet alone. Whereas a stable coin is just a number stored on a decentralized database being run by thousands and thousands of computers owned by people from different countries. That decentralized database is called a blockchain, and I'm going to talk about blockchain in just a second. So you can think of stable coins as digital US dollars that live on top of a blockchain instead of being on top of a banking database. They are called stable coins because their value is usually pegged to something stable. Most commonly the US dollar, but we do have some stable coins that are backed by gold itself. They don't jump up and down in value like what Bitcoin or Ethereum does. They behave like digital cash. A stable coin is a USD bank balance upgraded to the internet age. And because it is backed by a decentralized system that is borderless, you can send it anywhere in the world instantly, anytime, to anyone without needing a bank or a teller or a central server or even a country's financial system. The most popular stable coins, the two most popular stable coins include USDT and USDC. Each of these work like a digital version of money, but on blockchain rails. And so the big question becomes, how does the blockchain replace the centralized database that banks and EcoCash rely on? To understand stablecoins, you must understand the thing they live on, which is the blockchain. And essentially, a blockchain is a public shared tamper-proof database. You have thousands and thousands of computers storing the same database, and those databases having the same data. So think of it in a centralized system, right? You have one computer updating its database, but in a blockchain system, these thousands of computers have to agree together to accept any change to the database. No one single computer can have its own database that is different from what the other computers have in the blockchain network. It's actually a computer science breakthrough the way that the way that blockchain technology works. The changes that are done to the database are recorded as sort of like blocks, right? And those blocks are linked in a chain like manner, hence the name blockchain. So, because they're stored as a chain, any simple change to the first block will do some damage to the data that is stored in the other blocks, which is why they are tamper-proof. The most important thing about blockchain is that the database is public and everyone can see it. Everyone can see the changes being made to the database. Unlike a bank database, no single company controls it. No government can change balances. No one person can freeze accounts. No one computer can secretly update transactions. And no admin can undo or redo any transaction. It's the total opposite of a centralized system that EcoCash or any bank relies on. You can imagine a giant notebook shared across thousands of people around the world, right? Whenever anyone sends the money, the transaction is written on a new page. Every computer, every person then gets that new page and checks if that transaction is valid, and then if it's valid, they save that they update that page and save it. Once your transaction is written, no one can erase it. Not the government, not a bank, not even the creators of the blockchain. This is what people mean when they say blockchains are immutable. Why is this important? Because it means stablecoins inherit the safety of blockchain technology. To hack the blockchain, you would need to hack at least half of the different computers that have the database. Unlike with EcoCash, where you just need to hack Econet's servers, with blockchain, there is no admin who can freeze your funds on a whim, and there is not going to be a system downtime, no system busy, no reversals, no delays. The blockchain is always running because there are always thousands of computers that are running. This takes money from being something that is controlled by central authorities to something that can be controlled by math, code, and global consensus. And now that you understand the blockchain, let me get back to stablecoins, and I'm going to do a step-by-step explanation of the stablecoin model from how they are created to their use. And step number one, an issuing company collects deposit. Take the stablecoin USDC, for example. The company Seco, which is the company behind USDC, it collects real US dollars from customers or institutions, right? Then step number two, they store those dollars in vaults or they buy low risk liquid assets such as government bonds, right? For every one USDC coin in circulation, there is a dollar being held in a vault or within a treasury bill. And this is how they maintain their value. Step number three, they issue digital tokens on a blockchain. So if someone deposits, say, $1,000 in USD to Seco, which is the issuing company, in this case, Seco means 1,000 USDC on the blockchain, like Ethereum or Solana or Tron. And minting is just the process where Seco tells the blockchain that the person with address X now has this number of USDC coins. And remember, money is just numbers stored on a decentralized database. It's just numbers stored in a decentralized database. The person who gave Seco 1,000 will now get their balance on the blockchain increased by 1,000, which then becomes 1,000 USDC coins. They will now have 1,000 USDC digital dollars sitting in their crypto wallet. And moving on to step number four, the stable coins can now move freely like email. You can now send your USDC. The thousands of computers in the blockchain that are running the blockchain are the ones that just verify that you have the number which is enough for you to make the transfer. If you do have that enough balance, then the transaction is approved, and every computer in the blockchain that updates its database by subtracting the number of coins you are sending and adding that same amount to whoever is supposed to receive those amount of coins. It's just simple. And then step number 5 is redeeming. So let's say if you send me USDC and I now want real US dollars, I can then go to Seco and say, here's 1000 USDC, give me 1000 US dollars. And they will give me. Remember, the process of destroying them is it's just Seco telling the blockchain to make an update to the database to change numbers. They will retain or they will redeem those $1,000, and they will give me $1,000 in real cash. Now, I am sure you are starting to see how the stablecoin company acts like a digital central bank, just like EcoCash creates balances, or how RBZ prints money, or how your bank takes your deposits. Stablecoin issuers create and destroy tokens, but with one big difference. Every movement of every stablecoin is publicly visible on the blockchain. There is perfect transparency because of the blockchain. You cannot fake supplies. You cannot secretly create money. You cannot hide balances. This is why stablecoins are more trustworthy than many national currencies, especially in developing countries. And to really feel the power of stablecoins, let's look at EcoCash, the most relatable example for Zimbabweans, and compare it to stablecoins on different factors, starting with number one, availability. EcoCash works only in Zimbabwe, right? Stable coins, they work everywhere. You can send USDC from Harare to South Africa, to Nigeria, to the UK, and so on. EcoCash is local because of the regulations, while blockchain is global, right? And number two, operating hours. EcoCash sometimes goes down because of some networking issues or whatever errors that can happen at EcoCash. But blockchains, they operate 24 hours, 7 days a week, 365 days a year with no downtime because there's always a computer running the database. Number three, charges. EcoCash charges you for sending fees, withdrawal fees, agent fees, and all those other things. But with blockchain, you just have to pay gas fee, which is usually a few cents. And it does not matter how much money you are transferring with the blockchain. The gas fees are just equal. You can literally transfer 1 million US dollars worth of coins for just 2 cents. And number four, transaction speed. EcoCash to EcoCash transfers are instant, obviously, but interbank transfers can take hours or days. And stable coins, they settle in seconds on most blockchains like Solana and Tron. Number five, transparency, which is by far the most important one. EcoCash uses a private and centralized database that you can see. A hacker can update it without anyone noticing. A rogue employee can update it without anyone seeing it. And to far worse, Econet itself can start distributing money that it doesn't have, and we won't see it until it's too late. The system is closed, it's centralized. But stablecoins run on a public ledger, right? Everyone can see the transactions, everyone can see the supply, and so on. It's impossible to cheat the blockchain. And then number six, which is also important, is control and discrimination. EcoCash can freeze your wallet. It can block your transaction. It can reverse payments. They can limit how much you can send, or you can be shut down. They can be shut down by government orders easily. For stable coins, nobody can stop a blockchain transaction. Nobody can freeze your wallet. No questions are asked. If you have your private key and you are keeping it safe, you will control your money. And number seven, which I briefly touched on, is security. EcoCash servers can be hacked because you just have to hack one centralized system. You just have to hack one computer. Whereas blockchains are nearly unhackable. You would need to overpower thousands of computers globally and at once. It's practically impossible. And lastly, but not least, cross-border ability. EcoCash cannot send USD to South Africa or Europe unless they get to apply for a license in all those different countries. You would need remittance services for that, and you pay high fees and face a lot of delays. But stable coins move across borders instantly. They behave like email, sort of. And here's the big picture that the banks run on a centralized system. EcoCash runs on a centralized database. They decide what you can send, when you can send, how much you can send, who you can send to, what you are charged when the system is online, and so on. Stablecoins, on the other side, they flip the entire model. They offer a similar service but using a better system. There's no doubt that stablecoins will replace the current system and create tomorrow's money. And for people in Zimbabwe and across Africa where financial systems have failed again and again, stablecoins are definitely going to win. Uh, this has been the Tomorrow Money Show. I'll see you in the next episode. Until then, stay informed, stay empowered, and remember, the future of money is already here. Thank you.